The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour. This is the Wednesday edition, September the 16th. Very important to be looking at a whole bunch of things here. So let's go through it one at a time. Thank you for the guests, hosts earlier. Great shows as always, and got a lot of information from Tom's assessment of what he's looking at in bonds, right to down to Larry's charts, and certainly that Federal Reserve assets picture with 36% annual rate for nearly 6 years is something to be a little concerned about. So let's do this. We're looking at the Dow right now at 16,047. I'm going to just move to this chart, if you don't mind. This is the daily chart that I send out to subscribers every day, and what it says is that there has been a very narrow trading band. Now there's been an H formation. They went to a slightly higher low bar with another H formation, and now we've extended even higher. We haven't gone to leg C in the Chapman wave in the daily chart above 16,664. That's possible, but it isn't going to happen right this way. It hasn't happened up until now, but we're only 15 points away, and it's real easy to get those 15 points. So this is what I'm looking at. If I knew nothing about the Fed at this particular point, I'd say this is a critical stage because the stochastic still hasn't gone above 80%. It's at 78%. That's real close. It's 79%. But the MACD is still expanding, and the MACD is really following the price movement, and that's very good, number one. Number two is, you see this dashed red line? You see the way that the chart has been moving steadily higher with higher lows, not necessarily higher highs, but higher lows, and walking the 9-period exponential moving average, that maroon colored line right there. Well, if you want to be brutally structured, just take away all the emotion. The resistance in the 16,060s to 90s is quite formidable. But only when you get a lower low, in other words, this low right here on the 10th, instead of being a 16,212, really should have slipped and tested and probably broken under 16,026. Should have gone real close to 16,000. That's the reason why we've tightened stops in these short positions, still have short positions, but I'm looking at this and I'm saying, part A is that the pattern hasn't been a classic H to M pattern, mostly because yesterday's spiral to the upside, instead of pulling back down and then going to the upside, just went straight to the upside without taking out Monday's low of 16,330. But it did not go to leg C yesterday. So now what we've got is a very interesting situation. You know how I talk about 1, 3, 6, one in a bull market or bull phase? Whether it's a 1-minute chart or a monthly chart, it doesn't matter. You really want to see no more than one peak with one bar, and immediately you start on the second bar, you want to be starting the next leg up. You can go three bars, that's okay. You really don't want to go more than that, because what's happened is you're losing momentum. You've got more a stair-step move, which means that if you don't get the exact low, you don't want to be buying higher, because the pullback's going to be sharp enough. And now we've just taken in, we've started leg C this very minute as I'm talking. So this is what I said to subscribers, that the support at 16,530 to 480s should be strong, and that we need to go above 16,664s in the Dow to see leg C. And now we've got our leg C. If you're getting a leg C with a sideways move like this, you might get a pullback, But you have to consider that having gone this far in a sideways motion, you've built enough of a foundation to say that it's really clear. A close below 16,430, 16,390s, a close that is, would suggest that this pattern is going to continue, but a break into the 16,730s or 50s, either today or tomorrow or higher, says, wait a minute, you could have formed a very large rectangle formation. Let me just draw that in where my rectangle formation. And this level of 17,125, which was really important support earlier, and I'm going to just draw this in now so that we can see what we're looking at, says that within a rectangle formation, an upside down flag pattern would take you, this is the flagpole down, would allow you to have an inside and a smaller time frame, and that would be the 120-minute chart. I don't know if I've got it right here. Maybe I haven't. Sorry, just I don't want to mess around. And say that you could, in fact, start to get a move to the upside that essentially takes you to this bar right here, the bar of the 21st of August with a high of 16,990. That would that would formulate the rectangle formation. Okay, so here we are. We're looking at upside potential. Downside potential says, as I said before, breaking this 9-period moving average, but really closing quite a bit below it, would suggest, more importantly, that not only have you broken the chance to go decisively upside right now, that's between now and Friday, but you're starting to stall out, and all you're doing is really creating this sideways motion. And the sideways motion says, be real careful about two things. One is the response, not what the Fed says or does, it's the response to it. If you are short, you've got to tighten up those stops immediately. And if you're long and the market pulls back, it says, yeah, we might be pulling back sharply, but we are really still in the trading range. And that H to M pattern, in other words, this rectangle formation, I'm actually going to make it, just because I'm talking technical analysis, I want to make it as clear as possible. This is really the trading band that I'd be looking at on the shorter term, somewhere in there. And that's what I'm looking at. So with that in mind, what I wanted to do is to show you that the shorter term trend has remained consistently within a framework, a boxed framework, and it breaks out when it gets into the 16,700s. Just want to make that real clear because we're all about patterns here. The other thing is that the H to M pattern has become stronger because it's been making rising highs and has held this dashed trend line. And because it's holding the dashed trend line, it says two things. It says one is we are beginning to make higher highs, even though they're fractionally higher. It's at 17,681 right now. But we are making higher lows. So I just wanted to clear up what I'm looking at in terms of the picture. And then now let's run numbers with us. The E-minis have not started leg C above 1982.75. The high so far today is 1978.25. Got 5 points to go. It looks like it's going to try for it, but look at this pattern here. So it's all very well saying looks. What we want to do is to be, you know, our Larry says, trade what you see. Let me show you something. There's this little mini channel right here. And in this channel, we are right this second bumping into the resistance, what I call the Chapman wave inside track repellent zone. If the 1979s is hit, there's a real good chance that the magnet of that previous high of 1982.75 will suddenly become active. All right? But look at the pattern. Remember the rectangle? I said rectangles get lost a lot longer than your patience. We've been in a rectangle formation, and it's getting narrower and narrower and narrower. And all of a sudden, there's the chance to break out decisively above all these highs. The most important high would be 1983.75 made on the 27th of August. All right? That's the E-minis. And 1958 is the 200-period moving average support. 1968.40, well, it'll be E-mini, so it'll be 1968.50, has to be the support to hold. All right. Numbers, let's go through the numbers. We've got the Dow right now up 80 at 16,680. You've got the S&P up 9 at 1987. You've got the E-mini is only up 7. This is very interesting. At 1977, they don't expect as much as the cash indices. Gold is up 17 at 1120. Let's just quickly look at gold, because this is a very important moment. And what I said to my subscribers is, we're going to find out real quickly about the commodities. Look at this. The gold went right through the 200-period exponential move average in leg D in the 120-minute chart right here. This is the continuous contract. And but the monthly and weekly are saying, ho-hum, ho-hum. But the daily says, this is a move that could have legs, because the stochastic went under at 20%. It's turned around. It's now at 15%. It was at, I think, 12 or something like that. It was at 9, and now it's moving very nicely. The MACD is held quite well, so this is going to be very important. Why? Because if the gold continuous contract at 1121, up 18 right now, can move above this trend line resistance, this moving average resistance of 1127 between now and tomorrow afternoon, then there's a chance that you could even get a leg B above 1169.80 if the Fed does something that turns the dollar on its head. And the dollar has turned on its head right now. It's down 40 cents at 95.21. And look what's happened. It hit that trend line resistance right there. Let me make it red so you can see what we're looking at. Make it weighted. I'll weight it a little bit more, and I'll turn it red. Yeah, look at that. That trend line resistance is going to be very important. But the weekly says, just like gold is ho-hum in the middle of a trading range, the weekly says, you know what? Unless we take out the low of, I think it was August the 24th of 92.62, this is just a trading range, which brings me to the major point that I wanted to get to, bonds. And as I go to bonds, I'm just going to say the bonds right now are down 5/30 seconds at 150, down a point at 100. The TLT is down a point at 180.94. I've got a left side, right side price time match, which comes in tomorrow, the 18th. What's tomorrow? The 18th is Friday. And that's saying that the most important support right now is 117.66. I'm going to talk quite a bit more about it. I'd like to go to Ben in Tallahassee. Ben, how are you?
Very good, Basil. Two questions.
Yes.
One is a technical. One is a related to QE. So, of course, the media just loves to blow these things up as big as they can. But if you think about it, if they don't touch the rates,
Yep.
it's not QE. It's not QE4 because they didn't do anything. They just didn't change it.
Very good point. Okay, so let's talk to that. Can you hold on, Ben?
Yep.
Good. Ben brings up a very good point here, but doing nothing is also a plan. So we'll talk about that. The Dow is up 75, S&P is up 9. I'll be right back. Basil Chapman, Tiger Technicians Hour. Hold on. Interesting comment.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Now the Dow's up 94 at 16,694, and the S&P is up almost 12 at 1989. Now this is going to be really interesting. We've got Ben from Tallahassee talking about the S&P, but also talking about rates and talking about doing nothing. But let me just show you a couple of things, Ben. In the chart patterns that I look at, I also have a program that was built for me a long time ago, which talked based on the Chapman Wave methodology of looking at support and resistance levels. Think of it a little bit like John Logan's horizontal lines that essentially tell you where there is support, where you can start looking at a change in trend, etc. What I'm looking at here is the TLT down 29 cents at 118.96, 118.32, the 119.90s, 119.60s were all support levels. It broke that. 118.32 in the daily is the next one. It looks as if it's testing it right now. It's in the 118s at 118.90s, hasn't gone down to the 30.30s yet. But if you look at the 120-minute chart that I'm showing right now, you will see that in the 120-minute chart, we've got 118.96, exactly where we are, as the lowest support level, because all the others from the 120s to the 190s and the 119s have been broken. And that suggests whenever I see a support level that's broken. Look how beautifully the resistance levels came in. 122.93, you had your 123's resistance there, 123.06, 123.75, 122.88 later on, and the high was 122.08, and 122.41, and the high was 122.15. So all of those worked as repellents and pushed the price down. So now that we're breaking to the downside, I have to wait for renewed. Let me just see if I can get it. I don't usually like to change these, but let's go to the 60-minute. Yep, even the 60-minute is changing. So let's go to the 30-minute. Yep, 119. We're right there. So this is going to be a very important period. Why? For two reasons. Because just on a purely technical basis, I'm not doing anything about what the Fed says. I'm just saying that I'm looking at very important levels on the TLT having been just taken out or about to be tested. That's number one. So that's suggesting, now I'm going to go back to my white background charts, and you'll see this is the TYX. This is the 30-year Treasury bond interest rate. It is the yield. And the 120-minute chart might have restarted, but I'm calling it right now an E. It could be an A/E, but it's broken way above the 200-period moving average. The daily chart is in leg D after a spectacular move, the August 24th low of 26.25. Let me just put that down. This is a very big move, but when you think about what happened on the way down, that V-shaped pattern that I always talk about, this is just a plain old V-shaped pattern, and we've gone there a little quicker to above the left side peak that would have been at 30.25, the peak of the 29th. So this speed is saying something's going on. The stochastics at 81, MACD is good. So now I'm going to do something else. I'm going to show you the weekly chart and say the weekly chart suggests that this is an important moment for two reasons. One is if the MACD, which hasn't crossed positive yet, crosses positive, and that'll probably happen if it gets to, if the TYX 30-year Treasury bond interest rate yield gets from 30.71 that it's at right now, up 9 cents. If it can go to, above that candle, if it can go to 31.40, there's a real good chance that the MACD will cross positive and the stochastic will go from 44% to probably 51%, 49, 51%. And at that point, that magnet of the 200-period moving average at 32.55 kicks in. So this is a very important moment,
right?
Because
my other question was what point do you feel the S&P 500 is not a retracement anymore?
Okay, so your question is, and that is a really good question, because believe me, over the last 48 hours, I've been looking at a lot of charts to say, you remember the way I was eliminating that extra move in the VIX to the downside, even though the price is the price, there are other things that I take into consideration to say that if there was, I can't even call it a regression to the mean, because I don't want to use a mathematical equation for something that I'm thinking in my head.
Right.
Trying to take emotion out of the question, and that was a technical and an emotional response on the 24th. So if that's the case, then you have to say that that extra move down in the S&P to 1867 really should have stopped somewhere around 1941. And if that's the case, then all that we're seeing right now is probably a move that is equally to the upside. Wow, do you have time? I'd like to answer this question a little bit more thoroughly.
Yeah, I mean, that's an incredibly important question, I'm sure.
Yeah, so that it is a very, I want to be back. We'll be back because the question is, have we made the low and are we going higher? And I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's up 88, S&P's up 10. We're on with Ben in Tallahassee, who asked a great question. The question is, has the S&P basically made a low that could turn out to be the low for a bigger move to the upside? Looking at a number of sectors, looking at a number of indexes, I think their work still needs to be done to the downside, but the cyclical stocks, and I made a big deal about it this morning in my opening call newsletter, the cyclical stocks are what we're going to be watching, especially GE, which has done very well, and Triple M, which looked like out of the 4, GE, IBM, Triple M, and UTX, was acting well. But when you're looking at the sectors, I'm surprised. I'm looking at the IBB earlier this about 10 minutes ago, down almost 4 points at 353. And the issue is this. I know that I have a very good friend in the biotech sector, and he said to me a while back, he said, I spoke to him about interest rates in the biotech sector. I said, surely they should be impacted by higher rates. And he said, yes, most people don't realize it, but there's a lot of lending and borrowing and all that stuff that goes on, and that the IBB could very well be impacted by higher rates. So all of a sudden, I'm looking and say, wait a minute, market is up 0.5% in the Dow and the S&P. The IBB is down. That's very interesting. I've got this big spike. I'm showing the weekly chart right here that after an E or a D, sometimes you do get this very sharp pullback, and then you can get something that's either a bounce or actually a brand new trend in yields to the upside. That's why this line that I drew a while back, this horizontal line, says that a close above, let me just see, a close above 31.50, it's at 30.68 on the 30-year, could in fact say, hey, rates are going to go higher. So this is a very important period, number one. And number two is I've spoken about the Japanization of our bond yields forever, except that there's a difference. Our stock market went 300% higher than the Japanese market. They just couldn't do anything. So there's a very big difference, and that does allow the Fed to do something. So now let me answer your question, because I had someone send me someone out of the blue. Sent me a whole thing saying S&P 500 decline over a 4-day span, going back to 1940, May of 1940, dropped 15.1%, and the market was 10.28% higher very soon after that. And it just goes on: 1962, 1987, 1998, 2002, 2008, 2011, goes on. Then there's another one that says returns after a similar sharp decline in a short period of time like that. And it shows you that in 1940, after 5 days of trading, the S&P was down 11%. But almost every single case after that, the S&P was up between 3%, 6%, 13%, 0.2, but almost always up except for 1940 to 1962, a much longer time frame. So I'm putting that into the pie, and I'm going to say to you, Ben, I believe that there is room for a little bit more of a rally. That's number one. Number two, the commodities. I'm showing the crude oil here. Crude oil is up 250 at 47.09. It made a high-level consolidation, a 50% consolidation, and now it's trying to spring back. That makes the weekly chart very good. You've got gold up. Let me see what gold is up now. Is it up? Gold is up $19, and if high-grade copper. So this really could be a moment, a very important moment in the life cycle of the commodities to the downside, of the stock market, because if the commodities rally and the dollar pulls back, it means that oil could rally. That means that the Exxons and the integrated oils, which are a big part of the S&P and some of the other indices, could help at least ameliorate any downturn. So I'm going to say to you, I don't want to make a prediction, because a prediction is you're either going to hit it or you're going to miss it. And what are you basing it on? We're basing it on an unknown. I'd rather say to you, if the S&P, and this is very important because you're looking at it and saying, wait, if I have any short positions and we're going to go higher than 2005, say on the S&P, that's really not a place that you want to be. So I'm going to do two things. One is, immediately after the Fed announcement tomorrow, there could be either just a big hesitation as if to say, now what do we do? Or there could be a response. And if that response is not at 2:15, not at 2:30, but at 3 o'clock, let it give it an hour. At 3 o'clock, if the S&P is up 12 to 15 points and holding, that's suggesting that the market likes whatever it is that's happening, or at least it appreciates it, or at least it says, we can handle it, and then there should be further moves to the upside. Gold and some of the gold stocks are saying that whatever the Fed announces tomorrow, having taken off like this, if they continue into 4 o'clock, moving higher, that's all the commodities. It says commodities should have a 3 to 6 week really good rally if that follows through into next week. And if they suddenly fall and the dollar just screams to the upside, that's going to say, hey, the S&P is probably going to be pulling back. So on the upside, a close Thursday or Friday in the S&P above 2,000, between 2,000 and 2005, getting up there and holding, I would say that that's positive. And 2008 is the 9-period moving average. And on the downside, 1965 That's the 9-period moving average. If that gets taken out and it closes down that number of points, whatever we close today, and it closes down tomorrow under 1965, that says, uh-oh, M-shaped pattern is continuing. There might be support in the next week or so, but it's stuck in, at best, a trading range. And at worst, it's going down to test the 1867 level. My technicals suggest from the MACD and the stochastic and the S&P that this is just going to be a bounce. So to answer your question, is this a brand new move to the upside? I just don't think you can. Let me just do the GE. If I'm talking about it again, let me just go to GE now.
I'm looking at the weekly on 3M, and it looks really bad.
Well, that's right. And GE is acting
weeklies.
But GE is acting very well right now, and it's hit the 200-period moving average. It's gone from the flash crash recently of 1937 to 25.96. That is more than a 6-point move. That is huge for GE, and I have to consider that to be a market positive. IBM is up at 148. It's not so good. Triple M, and I showed the chart this morning, is improving. But all it's saying is, gee, I've made such a big arch formation. I can make a smaller arch formation. But, gee, that low that was made at a 134 round number, I love round numbers. So that says there could be a little more room to the upside. But it says we're probably going to come back and test it.
Do you agree that UTX weekly looks pretty bad, too?
And the UTX, I didn't even want to talk about it because that weekly but this is how bottoms are made. They come off the bottom without retesting. And that's important. So all I'm saying to you is, look at going from 124, the high, all-time high in United Technologies, UTX, trading out 93.46, up 78, but slumping down to 87. That's a 50-point move in a major stock. It says there's room to bounce, but it's really not a very good sign.
Basil, I'm doing my best to keep you on the short side, but I'm not doing a very good job.
You know, I know exactly what you mean, and I have to tell you, I really don't mind switching and going to the long side at all, because I think if there is a long side, I'd spoken about the SPY, and I said that the SPY has a pattern that I just cannot ignore. It's what I call a price volume spike low. That was on the 24th at 182.40. And what I'd said is this pattern doesn't tell you how high you can go, but what it says, you can go for 28 sessions, and if that holds, you can actually double that to 52 sessions. But if you don't break key support, in this case, I'd say 190 would be key support, the low of the 1st of September. But if you don't break that within another 3 to 5 sessions, but instead you move higher, then I have to consider that you're making a very large arch formation in the SPY. It hasn't really changed that candle, the Roman candle of last month in the monthly. It's still a very negative thing, but that did hold beautiful support, as you can see here. So let me make it real clear. Standing aside and letting a market rally, expecting that you're going to get a much better shorts later on, nothing wrong in that. That's number one. Number two is we will know by certainly Friday morning the response in the overall market and all the sectors. And as it stands right now, there's an anticipation that the commodities might benefit because the dollar's pulling back quite sharply. But we don't know until you get that response from the announcement. I don't want to over-anticipate. I would say, you know what, even pulling back and being neutral here, what if you're lost? So the market tanks by dropping 300 points. That's just telling you you're going to go down even further. The market spirals higher by going up 200, 250 points. It says, hey, there's still room on the upside in this big arch formation. So what if you're lost? You haven't lost anything except you've kept your money intact, and that's really important.
Well, I think the biggest thing is, and I apologize for taking all your time, but I think the biggest thing is the people that are already short, getting out now, right, versus starting a new position. And then
correct.
So I think if this thing goes much higher, there's probably going to be a big short squeeze here coming soon anyway. So.
But what you're also saying is if you were able to time it correctly and you got in on the short side much higher up in any stock or whatever it is that you were short. For instance, we have shorts now they're not rallying. They're holding in some of the sectors and that stock that one stock that we have short. at this particular point. And the sectors we've got are working. And all I can say is that's the way I want to do it. I want to know that we're in the sectors that are the weakest, and that's most important. And I think that that's the way you can overcome it. But if you just got short recently, then you've got to put in a stop, because you can always get back in, and you don't want to be hit badly. It's just one of those things. Hope that helps you a little bit.
Yep, Basil, thank you very much.
Thank you very much for calling. That was Ben Tallahassee. Let's go to Hugh in Boston. Hugh, how are you?
Good. How are you, Basil?
I'm very well, thank you.
I was calling to find out, what do you think about Arena, ARNA Pharmaceutical?
So Arena Pharmaceuticals is a stock that has been every once in a while, it attracts my attention. It's almost always because it's suddenly spiraling to the upside, and I say, oh, that's a stock I should have been looking at. But in fact, it does it so quickly, and then it fails so miserably that ARNA has gone to, look at this, if you look at this monthly chart, this is monthly, this is what you often see in daily charts, not monthly in biotech. I don't know if it's a biotech, but it's a pharmaceutical. So the high was 1350 back in June of 2012, and it's just made a series of lower highs and lower lows. Do you know anything about this on a fundamental level?
Yeah, the company has a lot bigger pipelines, and probably possible somebody can take out. And I've seen going up and down, and I've taken the ride also. But the last time I bought it, got stuck in it, and now I'm thinking averaging down. Averaging, and see what it. And the chart looks really nice right now. It looks like it has momentum in there.
Yes. Okay, let me do a couple of things. See, when someone calls, and I get the impression from the voice, from the tone, that it's not really a question of where do I think it's going. It's a matter of what I can hear is, how do I either extricate myself from a situation, or do I think the stock's going to go back to where I bought it? And I'm looking at this, and I'm suggesting to you that the chart formation on the daily is in fact quite I wouldn't say positive, but it's much more constructive, because the MACD is rallying, the stochastic's rallying. It's at 2.84 ARNA, but I'm really worried about this. I think I looked at it just recently because there was another stock I wanted to look at, and I think I misprinted it, an upcoming ARNA, and I just thought, wow, these biotechs, when they get hit so badly. Can I just make a suggestion to you?
Sure.
If there is a rally above 2.99, that was the high of the 14th, could you take at least a small portion and make what we call a trailing stop of maybe 264 or 274, just to make sure that if it goes back down again, you've at least got some money out of it? Because this is not a good chart. This is I'd be very nervous about this chart, because the history of this chart is that there's a tide that is going out, and everybody keeps talking probably about a takeover or something. But boy, there's a reason why a biotech company that's been out for a long time is trading at $2.84, and it's because there's nothing much there. So, and you know what? And you did average down. That's the cardinal sin of the stock market. Of most, I wouldn't even say amateurs, professionals do it as well, is to think that if I average down and you haven't got a very constructive reason, it's going to come back, but it doesn't have to come back to your original price. It just has to come back to your average. I'm suggesting to you that it might go a lot lower. You know what I'm going to suggest? If you can call me Friday, let's look at it again. But all I'm saying to you, if it goes underneath if it goes under 2.80, just take a little bit off. But if it goes above $3, have a trading stop of 282. And call me again Friday, we'll look at it. Thank you.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. So I just wanted to do one quick thing. I just wanted to tell, I hope that, let me just put this here. I hope that Ben's still listening. Ben, I just wanted to re-emphasize that the pattern so far with the MACD and stochastic so strong should have the Dow up in the 16,900s. So the sideways pattern using up all this energy, usurping energy, says, boy, tomorrow at 4 o'clock, with this kind of strength, if the Dow starts to fail, that'll probably be a bad sign. Okay, now I can go to Elsa. Elsa, we've got you. Oh, Ilka. Sorry, I'm doing two things at once. Ilka, how are you?
Wonderful, Basil. Best wishes to your family. How are you?
Yeah, thank you. I'm well, thank you. You would like to look at
Shake Shack.
Shake Shack. And have you been to a Shake Shack?
You know what? I have not yet, although I'm meaning to go.
It's not bad. Not bad. They're tiny little burgers, and they kind of okay. And the French fries are not bad. But other than that, I'm not sure what everybody hangs around for.
Okay, very good. Yeah, nothing special. Well,
So you're long this, and it's at 51.98 down 20 cents, right?
so actually, I went in today, this morning, and I'm questioning: is it worth waiting to the D for the daily and on the daily?
Well, I'm so pleased you brought up the stock, and I'll tell you why. A moment ago, I had you in Boston, and we're looking at Arna. And look at the daily chart of Shake Shack. Look at the daily chart of Arna. They're not dissimilar. They have a lot of characteristics of that are the same. Leg B goes to a peak B. That's Arna. And Shake Shack has got leg A goes to peak A, then a peak B, then it runs up to a peak C, but the conglomeration of the pattern is a stair-step move. Now, this is the big thing. Because it's taken, you know my rule of 136? Because it's taken more than 3 days. This is the third day of consolidation. It's like the previous one at B. It says that the sudden moves to the upside are really important now, except if you aren't in it towards the low, so that you have a cushion, because it goes from a low to a high, and then the high pulls back immediately. It doesn't hold there. The entry point that you have now is the most risky. It's a D in the 120-minute chart. I used a peak C1, C2. It's actually C1, C2, C3. Brand new move to the upside right here. Is that an up arrow? That should be an up arrow right there. And we've gone to a peak C under the 200-period moving average. It gets rejected sharply. It's in a rectangle formation. I think that the entry point that you have now is one of those, anticipating a D that could fail because it could be an arch formation. And that arch formation, I don't have to tell you, says that if in fact it starts to pull back and close under the 9 EMA, you have to watch the most important candle. That's the candle of the 11th, the low of 48.49. So all I can say to you is that I would have a very tight stop of the 9-period moving average of today, which is round about 51, let's call it 51.20. But in fact, I wouldn't even hang around. I would just say to you that I would lighten up if it went to 51.70, and I'd keep that other position and give it a little bit more room, but a close quite a bit lower today, like 35 cents lower than it's at right now, says you have to, Thursday and Friday has to be one of those sessions where it just takes off again. I don't think if it waits this time, more than 3 sessions, goes to 4, 5, and 6, it says you've got to watch that weekly, because the weekly chart technically is still very poor. The 200-period moving at average of 46.60 is almost like a magnet. This has to break away sharply and get to the 50. Wow, it really has to get to the 55s. Hope that helps you.
Beautiful. Thank you, Basil.
Thank you very much for calling. That's LK in Boston. So, folks, let's just listen real quickly. I think that most of the moves in the Dow has been done for now. You're going to be watching real closely. The VIX has gone to a leg D. The VIX has to hold. If VIX starts trading in the 19s to 17s tomorrow afternoon, this market's going higher.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.